And welcome to this video on the sale of non-current assets, also called disposal of non-current assets. So to start off with a quick bit of revision on depreciation. So depreciation of non-current assets, I'm going to show you two methods here. The straight line method, so the cost is written off equally over the estimated useful life of the asset, and diminishing or reducing balance method, a fixed percentage is written off the reduced balance, also known as the carrying amount, the net book value each year. So I'll show you both methods now. So in example 1, sale of non-current assets. So on the 1st of January 2021, machinery was bought for a bank payment at a cost of £5,000. For 31st December 2023, disposal proceeds as the money was received when it was sold was £1,200. Depreciation method is straight line method and it's 20% per year. Now this is what we've got to do. Show the following ledger accounts. So A, the machinery cost account, B, the machinery provision for depreciation account, and C, the disposal account for machinery. And finally, we're to show the extract from the income statement showing the depreciation of machinery and loss of machinery on disposal. So this is the machinery cost account. So machinery costs us an asset, and we paid for the machinery through the bank, and the amount was £5,000. So that's £5,000. Now, at the end of that year is the 31st of December 2021. Now, we still had the asset, so we've got a balance carried down of £5,000. Now, we've got a balance carried down. That means on the next day, the beginning of the following year, the 1st of January 2022, again, we've got a balance brought down of £5,000. We still had it on the 31st December 2022. So again, balance carried down is still £5,000. And the balance brought down on the 1st of January 2023, again, is the £5,000, the original cost of the asset. Now, on the 31st of December, it was sold. So we've got disposal. So that means the £5,000 cost is transferred to the disposal account. So for the disposal account, we've got £5,000. Now, I'll just highlight that because we're going to come back to that in a little while. So let's let it highlight that bit there. So that will come back to later on. Now, depreciation now. So the depreciation, we're told in the question, is straight line method at 20% per year. So the method of depreciation, we take the cost, then times 20% per year. So year 1, the 31st December 2021, the cost was £5,000, times 20%, gives us a depreciation of £1,000. So that £1,000 is going to go in our income statement. So our provision for depreciation on the credit side, we have £1,000. Now at the end of the year, 1st of December 2021, we still got the asset. So the depreciation then is still £1,000. So that's the total to date of £1,000. Starting on next year, the 1st of January 2022, the balance brought down is the previous balance carried down of £1,000. Now the income statement again for that year is straight line method. So it's cost of £5,000 times 20%, which is £1,000. So again, in that year, the depreciation is £1,000. Now it's different now. Total depreciation now for both years is £2,000. So that means the balance carried down now is £2,000. So the total on the debit side is also £2,000. Now, on the 1st of January 2023, we've got a balance brought down, and that's our carried down balance on the 3rd of December 2022 of £2,000. Depreciation for the 31st of December 2023 year, which goes in the income statement, again, it's the cost of £5,000 times the percentage 20%, it's £1,000. So it's going to be £1,000 there. So the total depreciation today, also known as the cumulative depreciation, is £3,000 in total. Now, on the 31st of December, the machine was disposed of. So again, the total amount of depreciation is going to be transferred to the disposal account on the date of disposal. So it's going to be £3,000. So a total there is also £3,000. Right, so again, let me just highlight that bit there because we're going to use it in a moment. Right, so we've done our cost account, we've done our provisional depreciation account, now the disposal account for machinery. Now, on my debit side, we're going to put down the cost at the time of disposal. The cost at the time of disposal was, go to your cost account, as they're figured out, of £5,000. So that's our machinery cost, £5,000. So again, I'll highlight that so we can match it. Then I want the provision for depreciation at the time of disposal, the 30th of December 2023. And that's our depreciation of £3,000 there in the machinery provision for depreciation account. So again, that's at the time of disposal. So again, I'm going to highlight that again as well, so you can follow where the amounts have come from. Now the bank is the amount we sold it for, also known as the disposal proceeds. So back to the question, disposal proceeds is £1,200. That will be debited the bank account, so it's credited our disposal account. So it's £1,200 is our bank figure. Now we've got one item left now, which is what's going to go in the income statement. So that's going to be our balancing figure. So I'll put in practice there the balance. So our debit side totals 5,000. Our credit side at the moment is 4,200. But we must have both sides the same, which is the biggest total. So that's going to be £5,000 as well. And then the income statement is going to be the £5,000. Take away the £3,000. Take away the £1,200. So in the income statement, we're going to have a figure of £800. Now, our cost was 5,000. Depreciation in the bank came to 4,200. Now, that's less than £5,000. So if that's less, that means we've got a loss on disposal. So in the income statement, that's going to be in our expenses section, loss on disposal of £800. So now let's look at the income statement extract for the year ended the 31st December 2023. Right, depreciation for machinery. So I go back to the depreciation account, and year ended 31st December 2023, that's £1,000. So that's going to be £1,000 there. And let me just highlight that one in a different colour to help you out. So that comes from now. And then our loss on disposal comes from our disposal account, and that's the £800 there. So that's when you're doing the straight line method for disposal. Now, in example 2 now, we've got selling non-current assets. So again, the 1st of January 2020, machinery cost is paid through the bank, £30,000. The 31st of January 2023, disposal proceeds were £1,200. Depreciation at this time is different. It's the reducing balance method at 25% per year. And we've got to show the following ledger accounts. A, the machinery cost account. B, machinery provision for depreciation account. And C, disposal account for machinery. And finally, show the extract from the income statement showing the depreciation of machinery and loss on disposal of machinery. So again, the cost is a simple one. On the 1st of January 2020, they paid £30,000 for the cost of the machine. Now, at the end of December 2020, we still had the machine, so the cost again is going to stay the same of £30,000. So in all these questions, your cost will always remain the same each year. So balance brought down, again, is £30,000. The balance carried down at the end of 2021 is also £30,000. Balance brought down at the 1st of January 2022 is your £30,000. Carried down at the end of 2022 is £30,000. Brought down on the 1st of January 2023, again, that's £30,000. And then we're told it was disposed of on the 31st of January 2023. So that balance of £30,000 now is going to go to our disposal account. So again, let me just highlight that one in yellow so you can be able to follow it later on. Now the depreciation, and this time it's a bit different than last time because we've got reduced and balanced method. So for the income statement, it's going to be the cost, take away the previous depreciation for the first year is 0, times 25%, so it's going to be £7,500 in the income statement. So that's the depreciation charge for the year. Now, so at the end of December 2020, our total depreciation a day is £7,500, so it's going to be carried down. So the start of 2021, the 1st of January, the balance brought down is the £7,500. Now we've got to do the income statement charge for depreciation for the year ended 31st December 2021. So here we go, the depreciation, it's the cost, take away the previous depreciation from previous years, which is £7,500. You times by 25%, and you'll get £5,625. That's the amount going to go in our income statement. So if I total up my credit side, I'm going to have 13,125. That means my balance carried down at the end of 2021, my total depreciation is going to be 13,125. So let's check that. It's 13,125. And again, the total on the debit side will also be 13,125. So the 1st of January 2022 now, got the balance brought down. It's going to be the balance carried down on the 30th of December 2021. So that's going to be our 13,125. Income statement then. So again, it's the cost of 30,000. Take away the accumulated depreciation, that's depreciation from the past, which is 13,125, times 25%, and it comes to £4,218.75p. Now, for our purposes, we're going to do this to the nearest pounds. So it's going to be 4,219. So again, the total depreciation now at the end of 2022 is the 13,125 plus the 4,219 comes a total of 17,344. So at the end of December 2022, that's the amount we're going to carry down to the following year, the 17,344. And my debit side will total 17,344. Now the year of disposal. So again, at the end of December 2022, balance carried down to 17,344 becomes the balance brought down on the 1st of January 2023. So it's going to be 17,344. Here, let's just check that, 17,344. Depreciation for the year ended 30th of December 2023 is the 30,000. Take away the depreciation from the past, which is all of these three here, and that totals 17,343. Let me just check down. That is not 343, sorry, it's 17,344. So it's the 13,000. Take away 17,344. Let me just change that for you. Then times by our 25%. And we get 3,164. So the income statement for the 31st December 2023 year end is 3,164. And that gives a total depreciation this date, which is your accumulated depreciation of 20,508. Now, on the 31st December, we do not carry it down because we dispose of it. So that amount of £20,508 goes to our disposal account. So my total there is also 20,508. So again, let me highlight that bit again for you in yellow, because we're going to use that in a second. We're now going to go to our disposal account for machinery. So machinery cost, we worked out on that earlier on, that was the first yellow one. The cost was £30,000, so we no longer have that. So that's £30,000 there. Provisional depreciation, that's what I've just highlighted over here. The depreciation at the time of disposal was 20,508. The bank figure, the money we received when the machinery was sold, was £1,200. So again, my debit side total is greater than my credit side total. So the debit side total is £30,000. So now I need to put the same figure in my credit side and find the difference. And the difference will be in the income statement. So it's going to be the 30,000, take away the 20,508, take away £1,200. So that's given me £8,292. So again, that's going to be a loss on disposal in the income statement, £8,292. Now, it's possible you can get a profit. You'll get a profit if the total on the credit side is greater than the total on the debit side. Then the balance in the figure there would be a profit on disposal. So let's now finish the last part now. Income statement extract for the year ended the 30th of December 2023, depreciation of machinery. So that's for the year end of 30th of December 2023. So we go back to the year end of 31st December 2023, and it's £3,164. So again, just to highlight that one so we can follow it. So that's where the 3,164 come from. And then the loss on disposal of machinery is our figure here of 8292. So it's 8292. So there you have the disposal or sale of non-current assets. One of the methods was with straight line method, depreciation, and the other method was reducing amounts method of depreciation. So thank you for watching the video and take care then.